Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, more mean reversion cash machine. Put money in your pocket, exploit volatility in the market around earnings season, exploit premiums in the options market on near expiration options on companies that are reporting earnings. So this week starts off with a bang. We have Palantir, we have Hims and Hers, we have, as I have on the screen here, Marriott International. And really, I thought I'd start with Marriott because this is a good example of the hypothesis that we are executing on these mean reversion cash machine trades. Marriott International trades two standard deviations below the mean in advance of its earnings report tomorrow morning before the market opens. Now, what we can do in a situation like this is to sell a put credit spread where we collect premiums even further below two standard deviations below the mean, trusting the magnetism of the mean, the fact that 95% of the time a stock is going to trade in between two standard deviations above the mean and two standard deviations below the mean. So if I sell an option, for example, the Friday expiration with the $242.50 strike price, you can see on this chart that is significantly below two standard deviations below the mean. I can collect just about $1 on that option. Check the pricing, everybody, because I clocked this somewhat around a half an hour ago, so I know prices are going to fluctuate. But at the time, I could collect $1 on the 242.50. And I've got downside insurance by buying the 235 strike for a net collection, a net credit, if you will, of 45 cents on this option. Really, to me, this is just a free money, free money, free money, free money trade. The stock, just to hit that first 242.50 strike price, would have to drop 5.8%. Okay? Now, of course, that can happen. Marriott doesn't tend to fluctuate. In other words, it's not very volatile, even around earnings releasing time. So feel very good about Marriott. Now on Palantir, this is just so fascinating because here we're going to simply execute a long short debit spread at the money using the Friday expirations. So with Palantir, now it's trading at 160. I'm going to put that into my spreadsheet so I've got more up-to-date information. Now, what won't be up-to-date are my option prices, but what I'm looking at here is I'm buying an at-the-money or 160 strike call option, and I'm going to buy a 160 strike put option. Then I'm going to sell the 170 call option, okay? And then I'm going to sell a 150 put option on this. And by doing that, on the call side, I'm collecting $8.85. I'm sorry, I'm spending $8.85. I'm collecting $4.75. So the net debit on the long is $4.10. On the put side, I'm spending $9.65 and I'm collecting $5.05. Total cost $4.60. Add it all together, all four legs of this trade in total is going to run you about $8.70. Now, if Palantir moves up or down by 6.25%, okay, remember the option market is expecting a a double digit, greater than 10% move up or down. And in some um, uh, documents that I've seen on this, the implied volatility is around 16%. So 10% more than what we need to pocket the full $10 on this spread, which, just to keep it simple, if we did 10 contracts, it's going to cost us $8,700. We pocket 10,000 and our net profit is $1,300. That's how you make money on Palantir. Forget about the volatility. Forget about guessing which way Palantir is going to move. Forget about everything else. Just exploit these huge option premiums and the fact that there is going to be volatility and should be significant volatility on Palantir. Now, finally, similar to Marriott, we have Caterpillar. Okay. Now, Caterpillar, well, I should go back. Palantir, just at the 160 price, let's look at it's trading closer to 2 standard deviations. Now, I'd be very tempted to just simply do a call credit spread on Palantir, but I do worry about, like I said, a 15 to 20% move in Palantir, which is really wouldn't be that surprising. So that's why I'm ignoring the power of the mean reversion in Palantir and just simply exploiting the fact that I can make money as long as the stock goes up or down 6.25%. So now on Caterpillar, like I said, not going to move very much, shouldn't, after its earnings report. And we are trading closer to 2 standard deviations. So in this case, as compared to Palantir, I am perfectly fine doing a call credit spread using, let's see, we're at 432. Let me just put that in the spreadsheet. We had been at 436 when I clocked it last time. So that's going to change the dynamic quite a bit. And the option prices, be sure to check these. But when the stock was at 346, I was looking at the 465 calls, selling those for $1, buying some insurance, even further up the pay scale at 475. That would cost me 50 cents. So net I collect 50 cents on a call credit spread. So whatever the strike prices you need to use, what we're looking for here is a net credit of 50 cents per contract. So that's really, I entered that wrong. It's not 342, it's 432. Okay, so for Caterpillar to threaten this to be a losing trade, the stock would need to go up some 7.5%. Again, that's using the 465 strike against a 432 price. And the premiums that you're going to collect are going to be different than what I've quoted here. So make sure you check with your brokerage account in real time to see exactly what this is. But triangulate your trade around 50 cents. So those are the 3 trades. I looked at hims and hers, not going to trade it. Deathly afraid of this one. They're really the arbitrage here really just wasn't that great. I was possibly looking at a tempting call credit spread requiring the stock to move more than 20% higher for the stock to not be profitable, right? This is a stock that could move 40% after earnings. I don't think that's going to happen, by the way. I'm just saying that it could. So just going to take a pass on hims and hers. Love Caterpillar, love Marriott, and love the free cash on a big move on Palantir. That's all I have for today, folks. This is JD. Good luck with all of your trading. I'll be back tomorrow with more videos, more stocks to talk about from a 2 Sigma mean reversion cash machine standpoint. And of course, I'll review these positions as well to see how we performed. Take care, everybody, and we'll see you all next time.